Hello and welcome all. In today's video, we are going to be delving deep into the psychology behind rules in trading. Do we need rules? Why do we need rules? And why the hell are they so damn hard to follow? Why? Now, I know what you're thinking. Another trader telling me I need to have rules in my trading plan and need to follow the trading plan without breaking the rules in order to be successful, blah, 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 blah. No. Well, yes, but no. It is so easy in the world of trading to take in mountains of information online and through mentors without properly processing the importance of it. Yes, you know you need to follow your trading rules, but then why the hell do you constantly break them time after time because you quote-unquote sense an opportunity? I know you have all heard of the key trading phrases thrown around the community. Trade without fear. Don't get emotional while trading. It's one thing to hear these things, one thing to understand these things, and another thing to live it. So don't just have this video on in the background while scrolling through your phone. I ask you to listen to it closely and even watch it multiple times if you need to so you can begin to implement these psychological edges in your trading. The moment you realize the market is completely random and unpredictable at all times, that is the moment you'll truly understand the nature of trading. But let's leave that topic for another day. Back to the topic of rules, or lack of. What makes the stock market so damn attractive to millions of people all around the world? Is it the endless opportunities it provides? The possibility to be able to sit back on a beach in the Bahamas, cocktail in hand, with a laptop and making millions of dollars effortlessly. Or maybe it's something deeper than that. Maybe, just maybe, it's the freedom the market provides in allowing people to express themselves. We've all grown up and lived lives through a set of rules. You know, when you were a baby, you were told, don't touch the stove. When you were a child, you were told, do your homework or else you get in trouble. And when you were working your 9 to 5, there was workplace requirements and deadlines you had to meet at all times. You've been bounded by rules your entire life, restricted in expressing yourself by other people around you. This creates deep psychological issues for a lot of people. Many people in the community tend to compare day trading with gambling. I'm here to tell you it's worse when you don't have a set of rules in place. Think about it. You walk into the casino, you pull out $1,000 to gamble. You sit on a roulette table and you put $200 on black. Think of this as if you're entering a trade. Both your trade and that roulette spin can produce completely random results. You either win or you lose. The dealer then spins the wheel, the ball lands on red. You've now lost $200. All those unhealthy emotions begin to appear. You want revenge on the dealer, you want revenge on the casino, you want to make your money back. But the matter of the fact is, the dealer has forced you to give up your $200 because you were wrong. He takes that $200 off you, and that's the rules. But what about your trade? You're now $200 down in your trade because it's worked against you. All those bad emotions of revenge, greed, and not being able to accept that you're wrong begin to appear. The only difference, there is nobody there forcing you to give up on your hand. Nobody is forcing you to sell. So accompany these bad psychological emotions with the lack of forced rules, and it's a recipe for disaster. You're sure you want to give it another 5-10 minutes, maybe recover some of your losses. You promise yourself you're going to sell once you recover some of those losses. But then all of a sudden, 5 or 10 minutes later, you're down 500, then 800. And now you've blown up your entire account without even getting the chance to make up for it in a different trade. You've completely destroyed your edge because you've allowed one bad trade to destroy your portfolio. Yes, this is an extreme example, but the same applies if you're doing this on a smaller scale. Risking 5% of your account every trade instead of 2% and averaging down on a losing trade rather than cutting your losses and moving on. There is no such thing as right or wrong in the market. There is only probability. Entering into what you conceive to be a nice setup, a perfect setup, only increases your chances of making money. It guarantees nothing. So be prepared to lose on every trade you ever make. As long as your edge exists and you stick to your rules, you'll be profitable in the long run. So, while day trading, are there really any rules? Can you be free from life's constraints in this small corner of the world? As long as you've adhered to your broker's requirements when depositing your money, there really are no rules. There's nothing really stopping you from selling, buying a stock whenever and however you want. Is it this freedom to express ourselves that makes trading so damn attractive? The freedom to do whatever the hell I want when I work? Maybe. Just maybe. This, however, can be a very, very dangerous mindset to be trapped in. Yes, you're right. The market offers unlimited opportunities every single second of every single day, but it also provides an endless amount of risk. And it is not until you understand the severity of these risks that you will not even dare to go into another trade that doesn't follow your rules. But before even going into that, why do we need rules in the first place? Simply put, our rules are our edge. A proven set of systematic rules that have been proven to provide us with an edge over the rest of the market. Remember, 95% of traders fail. So do you really think you can just jump in with no rules with all the freedom in the world and still beat the other 95% of people? Trading is a business, and I'm sorry to be the bearer of bad news, but businesses have rules in order to operate efficiently. Now, due to time constraints, I don't really want to go too much into our trading edge, so I'll leave that for another video. So please do subscribe for more content, and I promise I'll assist you in building your edge over the market. So now that you understand the importance of rules and why our trading rules can sometimes be so damn hard to follow, I bet you're asking, how do I ensure I always follow my rules? The truth is, it is extremely difficult to follow your rules until you understand that your edge does not exist without them. As long as you hold on to the mindset that you can beat the market because you're so damn smart, and slightly breaking your rules once or twice will not have that large of an impact, you'll never be able to make it in trading. When you want to succeed in trading as badly as you want to breathe, that's when you'll follow your rules. When you understand that breaking your rules, even the slightest, can completely set you and your trading career back for years, that's when you'll not even dare to break them. You need consistency. You need structure. It is extremely hard not to get emotional while trading. When a couple of losses begin to build up, you just want to get right back in and make that money back. Or the opposite. You freeze up and you lose complete faith in your trading plan. You need to fight those urges. It is extremely tough at first. I know this. But once you make it a habit and you realize the dangers of breaking those rules, that's when it'll become natural to you. And I promise you, you won't even think about it after that. Be as scared to break your trading rules as you are in breaking the law. I know this is extreme, but it can literally have a massive effect on your life if this is the career you want to pursue. Now, enough with the doomsday talk. Sometimes I just need to do this in order to get a message across. For me, personally, I try to set up my trading plan in a way that requires the least amount of judgment as possible. I like to make it mechanical, mathematical, and black and white so that no trade is left up for interpretation. Now, of course, this isn't entirely possible in a trading plan. Our experience, our knowledge, our intuition all come into play. But here are some examples of how I make my trading as mechanical and black and white as possible. Firstly, I calculate my exact risk to the dollar for every single trade I make. So if I want to risk $100, $200, $300, I'm calculating it to the exact T, and that is the risk I'm using for at least a month, the next few months until I want to scale up. I use the exact same risk. This helps me set up my trades, set up my edge. Okay. Now I know this may take a little bit longer to calculate before each trade, but it sort of suits the way that I trade because I don't scalp by the second. I'm in trades that are a bit longer, over 10 minutes, 20 minutes, half an hour, even sometimes a couple hours. So that kind of suits my style of trading and works well for me. And it ensures that I know a lot of other YouTubers, they just have a rough share size they like to buy into and a rough risk tolerance, but I like to keep it as specific as possible, black and white, so that I never overtrade, undertrade when I'm fearing the market or overconfident in the market. Another way I do it is through hard stops and limits. I know everybody knows you need to stop, but there are some people out there that promote mental stops, and that's just something that I don't agree with. I set hard stops and limits, bracket orders, before every single trade I make. No mental stops, so my mind cannot override my own rules. In the heat of the moment, when prices are jumping around, you've got to get in and out of a trade within seconds. A mental stop can easily be missed. You can easily just have a brain fade, and it can cause quite big issues in your trading and in your trading edge. This is the number one mistake new traders make. Okay, accept your losses, move on, set those hard stops. Now, another way I do it is through my stock watch list. So not even while I'm trading, but while setting up my watch list in the pre-market, I look up. I have a minimum price I like to trade. I don't like to trade any stocks under $10, and I recommend that nobody first starting trading trade stocks under $10 because they're open to heavy manipulation and usually have quite low floats, so they're very, very, very volatile. Float is another thing I look at, gap percentage, and of course volume. So I have a minimum volume that I require on each stock that I trade. That's both daily volume and relative volume. So look, I won't go into specifics about that because I would like to make another video on my pre-market watch list, because I do believe that the stocks you trade are even more important than your actual trading strategies that you trade. But I'll go over that in another video, so do please subscribe if you're interested in that. So those are just some examples of some hard-coded rules that can be applied to your trading that removes the need to make a judgment call and makes your rules more black and white. I hope you gained some real insight into the importance of rules in trading. Again, I understand most of you already know that you need rules in your trading, but I hope this video allowed you to really understand the importance of them. This is just one piece in a massive puzzle that you need to put together if you want to be a consistently profitable trader. Please subscribe as I'll continuously release videos to help you gain a mental edge over the market. If you haven't yet, please feel free to watch my introduction video, which I'll link in, to get an insight on my goals for the channel and my goals for the community. I will also leave a link below for my Discord server, which I've just recently started. I give out my pre-market watch list for free, and I'm also happy to discuss anything related to your own trading. Goodbye, and see you next time.